Hi, friends. Sorry I'm a little bit tardy. I'm doing property pursuits, and it's been just a crazy day. I had the Ferrari Lund sales meeting, and then we had a company call for the top producers announcement for 2025. And now here I am. Oh, and then I was late for a client call. And so that's why I'm starting this a little bit late. But thank you guys for coming and thank you for being patient. So this is Property Pursuits. It's a monthly update. I should probably pull this closer to my face. It's a monthly update I do on the housing market, but most of the updates you get, are like statistics and it's kind of stale and it doesn't tell you what you should be doing. So I like to call this a market update, but like less stale because my goal is that you see the real life implications of what's going on in the news, what's going on in the economy, and how it should be informing your real estate strategy. So let's get into it because I have a lot to go over today. A lot of opinions and a lot has been going on in the news that you guys need to know about. So I think, okay, there we go. Let me introduce myself since this is the first property pursuits of the year. And if you're new, I'm Shivani Peterson. I've been a mortgage advisor for, I think, 12 and a half years now. I was joking this morning at the sales meeting where I was introducing myself saying that I used to, when I first got into the industry, because I was like 22, 23, I hadn't even purchased a house myself yet. And I wanted people to take me seriously. And I used to be like, I can't wait for my hair to go gray so that I'll look like a credible advisor. And then you get old and you go gray and you do a bunch of years in this business. You start purchasing real estate yourself. You start investing in real estate yourself. And all of a sudden you're like, no, I don't want to say how long I've been doing this because it ages me. I've also got a master's in marriage and family therapy, which I focused on studying behavioral finance. And you'll find that influences a lot of the advice I give you guys. And I serve in a corporate role for All Western Mortgage's chief performance officer, which allows me to connect and coach with top producing loan officers all over the country and to see what's happening in their markets and where I can find common denominators that seem to be indicative of the real estate market as a whole and how it differs from what I'm seeing in my local market, Reno, Nevada. If you guys missed it last month, instead of doing property pursuits, I did a special webinar called Last Chance because I'm on a mission this year that no homebuyer get left behind. I truly, based on the data and my experience and what we are seeing happen in real time, what we are seeing unfold this year, I believe it will be one of the last best entry points into the real estate market. And what that mean is I think that as this cycle continues, we are at a moment where there's a window of opportunity for first time homebuyers, for first time real estate investors, and for move up buyers to get into a home they really want to be in for the next few years. There's no way to say how long the cycle will last, but it's going to ramp up and we're going to see a reacceleration of prices that will price a lot of people out who are on the sidelines waiting for something else to happen. If you missed that, there's a recording of it here in the circle. And I would love for you guys to watch it and share your thoughts with me. So for today, we're talking about Trump and all the promises he's made. What's interesting, between the $200 billion promise, the 50-year mortgages, the rhetoric about institutional investors, what I'm noticing is whether you agree with what he's saying or not, whether you think they're good ideas or not, whether they will actually come to fruition or not, is kind of the moot point, the secondary point behind the fact that there is definitely a focus on housing now. Trump has turned his head and noticed us over here in the real estate industry, and now everyone else has too. So if you're a buyer or a seller in this market, you're a real estate agent watching this or another lender, why wouldn't you be leaning in too? If the president's paying attention to housing and now all the headlines are about us, we should be paying attention too, because this should be influencing the choices we make and the strategies we have for this year. So, yeah, Trump is pushing for aggressive rate cuts. There's a new Fed chair coming. Um, on the other hand, regardless of who the Fed chair is, inflation doesn't really care about political pressure. It's just data. And the Fed needs data to make moves. So, how is all of this going to play out? Let's talk about it. We'll start with the $200 billion announcement. I'm hoping you guys will get an understanding of qualitative easing by the time I'm done explaining this. So, the Federal Reserve has two levers it can pull to stimulate the economy. Our central bank, the Federal Reserve, has a mandate to maintain long term economic stability. Mainly, they need to keep inflation under control while supporting a labor market that continues to have the ability to grow and flourish because when the labor market in America grows, America does well. But On the other hand, like I said, they have to keep inflation under control, and that's a tough job. This is a tough, like, dual-edged sword that they're dealing with. They have 2 levers they can pull to stimulate the economy. The one that everyone talks about all the time is the federal funds rate, which is the short-term lending rate. They can make cuts to that, or they can hike it up so that the economy either gets stimulated or they can pump the brakes on the economy by making those short-term borrowing costs more expensive. What people don't talk about as much is that they have a balance sheet that they manage, and they can purchase securities. They can purchase treasuries to stimulate the economy as well. I've explained here at nauseum, and is that how you say that? I've explained it a lot of times that the Fed funds rate is not the 30-year fixed mortgage interest rate. 30-year fixed is a long term borrowing cost. The Fed funds rate is short term borrowing costs like HELOCs and credit cards. The Fed funds rate influences long term borrowing costs for sure, but mortgage interest rates are driven by the demand for mortgage backed securities. And mortgage backed securities are the 200 billion that Trump was talking about. So when Donald Trump said that he wants government entities to purchase $200 billion in mortgage backed securities to lower mortgage interest rates, that's real and that works. That's their balance sheet and how much they hold on there. It's another way they can stimulate the economy. He made that announcement on a Thursday, and we saw mortgage rates improve right away. A lot of investors went ahead and priced in an increase in demand for mortgage bonds, which would benefit mortgage interest rates. Unfortunately, Trump is his own worst enemy, and so he did that on Thursday, and we saw, we were partying over here because we saw mortgage bonds in the green 30, 40, 50 basis points. And then on Friday night, he served the Federal Reserve with subpoenas for an investigation, and markets didn't like that kind of uncertainty. So on Monday, we gave back a lot of those gains. I'll come back to that and what happened as a result, but I will tell you, mortgages didn't change that much. Interest rates didn't drop significantly, especially once Monday came around and we gave back some of the gains, but people reacted either way. We saw a huge jump in mortgage applications and buyer activity, and real estate markets come alive based on that news. But that's in a long story short, qualitative easing. If you don't understand it still, I'm happy to chat with you about it anytime. You just let me know. Let me check the chat here and see if people are lost or doing okay. Oh, hi, Roger. Okay, we're doing good. So I'm going to carry on. You can find me online. You don't have to wait for these updates monthly. I also, by the way, put out a newsletter every Friday that you guys are welcome to join me or tune into. I put it out in video and content, whether you want to read or watch, blog or blog. Both are available. But you can also catch me on Instagram all the time, sharing anything real estate related at Shiv Peter. Okay, back on track. 50-year mortgages, another promise from Trump, and portable mortgages. So a borrower asked me literally last month if they should cancel two different escrows, the house they were purchasing and the house they were selling, to wait for Trump to make portable mortgages and 50-year loans a real thing. And I think that's a tough position to be in as a buyer and seller, to be like, oh man, am I about to make a bad decision right when everything could change in my favor? Here's the deal. You have to make the best decision you can with the information available now. We have no idea if and when these things would ever actually happen. So let me say this. 50-year mortgages, for me, the verdict is out. The jury's still out on whether this would be a good thing or a bad thing, because the banks are the ones who will benefit, and they have a very big lobby in Washington. They will collect a lot more interest on a 50-year loan. But on the other hand, I do believe that breaking into homeownership and not renting anymore is almost worth whatever it takes to get there, because of the impact I've seen, the way I've seen it change people's lives. Now, would it ever happen? I don't have a crystal ball. I can just tell you this, it's not happening tomorrow. And by the time, remember when Dave Ramsey told everyone to wait to buy a house until you could afford to do so with 20% down and on a 15-year term? Well, that was terrible advice, right? Because while you were waiting to save up 20%, home prices went up. You also had no way of predicting if you could afford what interest rates would be at that time. You're making a huge decision based on hypotheticals rather than facts. And it disadvantaged a lot of people. A lot of people missed out on years of accelerated wealth growth because they were waiting to have 20% down and to qualify for a 15-year loan. I would tell you the same logic applies here. You can't wait for a 50-year mortgage to come to fruition. You cannot wait for portable mortgages to pan out because we don't know if they ever will. The other big thing that Trump was talking about at NATO, I think it was 2 weeks ago, he made a speech and he talked about banning institutional investors from purchasing real estate. If you've been watching Property Pursuits for a long time, you might remember when Trevor Richardson came on. So I had posted a reel saying, America's going to turn into a nation of renters, and the media wants you to. The media is owned by institutional investors themselves, and they want to discourage you from buying homes so that they can buy up all the real estate and then we'll never be able to afford it. And a realtor slid into my DMs, Trevor, and said, Shivani, do you know how much of the housing stock in the United States that institutional investors own? I was like, no. And he told me it was 3 to 5%. That's it. That's all they own. So immediately, Trump's critics jumped in and said, this is not going to move the needle in a meaningful way because they don't own enough of the real estate in this country. Most of the landlords in this country are mom and pop investors like myself, people who invest in real estate to supplement their retirement strategy and own a portfolio of a couple homes. On the other side of that argument, institutional investors like BlackRock have been dedicating increasingly large, notable sums of their portfolio towards purchasing real estate in recent years. So the shares that they own are quickly growing. And I think that's why Trump said maybe we need to slow them down. Again, it's not something that's going to move the needle very quickly, if it happens at all. Because right now, they don't own the majority of homes. They don't own even nearly half. They don't even own a significant portion that's worth talking about. But they are buying them. They are trying to own more. So maybe you should be too. If they're doing it and they're some of the savviest investors in the country are focusing more of their funds on real estate, maybe we should be working on trying to buy a couple properties ourselves. Yes? I also think it's important to consider all housing benefits all housing. And institutions, investors, when they purchase real estate, they often improve it. They often purchase properties that were otherwise uninhabitable, or they purchase a property and they make it into a multifamily property and they put more units on the market. And yes, those units are for rent, but more housing benefits the cost of all housing because there's more choices, there's more inventory. And that's an important thing to understand. Now, the real meat of this is housing in an election year. Like, why are they paying so much attention to us? Well, housing is a good thing to have people feel good about when they head to the polls. And they will be heading to the polls later this year for midterm elections. For tens of millions of households, their home isn't just their shelter. So, no political party is coming to save us when it comes for bottoming out real estate prices. No political party, not the right, not the left, are incentivized to come and slash home prices and make them more affordable for first time home buyers. Why? That would aggravate a huge piece of their voting bloc. They're just not going to do it, guys. As I was saying, for millions of Americans, home isn't just shelter, it's the largest asset they have. And the way I put this the other day was, you know, it's proof that their hard work worked. It's one of the few ways that you can build wealth in America without a certain degree, without having an inheritance, without coming from money. It breaks through all socioeconomic barriers. Real estate does that. And so I don't see any politician who needs votes coming out and saying, I'm going to cut home prices. In fact, Trump said at NATO himself he could crush home prices if he wanted to, but he won't because it would hurt so many Americans. And that's the piece of the affordability puzzle that we all struggle with over and over. Nobody really wants home prices to come down because that would impact them in a negative way. Now, on the other hand, if he does bring down interest rates, we've talked about this, what happens to home prices? They will likely go up, which is why I did a whole webinar called Your Last Chance. You should buy now before interest rates go up so that you can take advantage of the market as it stands now and so that you can make decisions based on facts. But I digress. Let me continue and stay on track. Lower rates will bring people to the polls. So I do think they're coming this year, you guys. I'm making a crystal ball prediction. I've done this before. I've been wrong. I've also been right a lot of times. Interest rates will likely continue to trend down this year. I can't tell you what they'll be at, but I can tell you I have a feeling they'll be looking pretty good when people need to go vote. Okay, so the Fed drama that I alluded to earlier with the subpoenas, let me explain this to you because it did impact markets, and I think it will continue to impact markets as it stays in the news. Markets didn't react well to the investigation because markets like certainty. Investors like to know what's happening. They don't like gambling, even though it is inherently a gambling sport. They also like to think that the Federal Reserve, our central bank, will maintain credibility, meaning it will maintain political neutrality. Everyone knows that Jerome Powell being served with a subpoena was political warfare. It was because Trump's mad at him. He's not being investigated because of his choices with interest rate cuts. He's being investigated because of a testimony he gave before Congress regarding the budget for the new federal buildings that have been in progress for years. These federal buildings have needed updating for years. Jerome Powell is not the general contractor directly responsible for overseeing the budget for these buildings or approving the contractors or pocketing the money. But he's being investigated because there's a big number attached to it on how much this budget is costing, and it's a good thing to distract people with. Weapons of mass distraction is something that this administration is excellent at. This investigation was intended to be a distraction, but it created a problem in the markets. Headlines reported something markets didn't like because it created uncertainty with what will happen. Now, not being talked about a ton in the headlines are the governors of the board. So the Federal Reserve is not just Jerome Powell acting alone. The Federal Reserve has a board of governors, and those governors were all up for reappointment later this year as well. But do you know what they just did? Do you know how they might have solidified their independence? They went ahead and voted to reappoint themselves much earlier than they needed to. This was a quiet but strategic move to hopefully maintain political neutrality here and to keep the Fed independent and credible. And then lastly, the major Fed news that we've been watching is the Warsh appointment. So Kevin Warsh has been named as the next or the replacement for Jerome Powell. He does still need to go through Senate confirmation hearings. And, Powell's term isn't up till May. So we still have a couple Fed meetings and rate decisions that'll happen in the meantime where Powell still has a lot of influence over the board. I do think he'll be confirmed. He has a long Wall Street history. He's been a Republican policy commentator. He's earned his credibility, and he hasn't really been known up to now as a Trump loyalist. His father-in-law is for sure, but not him. And we'll see. Will he serve as a puppet for Trump? I don't know. He has made comments in the past that go both ways. He's made comments criticizing Powell and supporting Trump's demands for lower interest rates, but he has also talked about how important it is for the Fed to be credible and for them to maintain their independence. So let's see. Why do you care about the Fed drama? Because, like I said, the Fed has two major levers they can pull to stimulate the economy that directly influence borrowing costs. And one of the major drivers of the real estate market is mortgage interest rates, which is something that was proven when Trump made that $200 billion announcement. Americans are being bombarded with bad news. I'm sure a lot of you watching this live or recording later feel that. We feel it in our bones that every time we open the phone, it's bad news. Every time we turn on the TV or watch the headlines, they feel very, very defeating. So, a few hopeful headlines coming out about the American dream, about making homeownership a real thing again, about justifying, about validating people's desires to become homeowners and saying, hey, that's actually a good idea. And I see why you'd want to do that. They carried a lot of weight. People latched onto these headlines in a way like I've never seen. When Trump made the announcement about the $200 billion being encouraged to be purchased so that long term borrowing costs could come down so that Americans could afford to buy homes, I am just one loan officer in Reno, Nevada. And the next day, I saw 12 loan applications come through. 12 doesn't seem like a big number, but again, I am just one person. We saw refinance applications jump 40%. If people are able to save money on their mortgage, one, they're putting more money back into the economy. Two, they're maybe paying off some of their debt and improving their behavior with money. Three, they might start saving up and figuring out their plan to buy the house that better fits their needs right now, which will unlock inventory. So it was a big deal. And even though we didn't see the math change that much, we saw a big difference in behavior. And that's something to pay attention to. And it's a hint of what will come as interest rates truly do come down. What should you do with this information? So, like I said, Property Pursuits is about empowering you to know what you should be doing with the newest information, what the headlines mean for you. Based on my experience as boots on the ground, actually helping people buy homes and noticing what's changing in real time. If I were you and I was looking to buy this year, I would look alive. I would pay attention. And I know I say this all the time, guys, but I really do believe you cannot try to time the market. You have to make a decision with the information available. But if you were going to try to time the market, now, now would be the time to do so. Okay? If you're looking to sell this year and qualify to purchase something else, I would get pre-approved with someone right now who's going to be monitoring, actively monitoring interest rates and what's happening to your buying power. And if you're a realtor, I would be telling everyone you talk to about what's going on right now and what's happening in the housing market and why people are paying so much attention. You're the expert. You should be establishing yourself as the source of information for your sphere because there's a lot of information coming out very fast right now. You have a lot to talk about. If you'd like more one on one advice, you want to talk with me about this, I love having intelligent conversations about the real estate market. I love getting other perspectives, and I love empowering people to make their real estate goals happen right now. So I'd be happy to meet with you one on one. You can use that QR code to schedule to access my calendar. Otherwise, I'll catch you guys next month.